gone now to Dow. So this is the other half of the proposed merger. Similar product mix. Raw materials input into the same industries. Agriculture, as we mentioned before, consumer products and services. It's probably the third largest chemical company in the world. It's very big in things like chlorine, for example, I noticed. It's after Sinopec, which is Chinese, and BASF, which is German, the largest by turnover. It's got thousands and thousands of employees. Headquartered in Midland, Michigan. Market cap 58.4 billion. So there you go, almost identical to DuPont. Price to earnings ratio much lower though, 7.72. So there must be some sort of earnings related thing going on there. Dividend yield higher, 3.51%. Let's start with the share chart, because that will also reveal a similar sort of picture, I think. A little bit stronger in the early years and then drifting around. All-time high for Dow. I'm liking all-time highs these days. $56 in March 2005. Wow, so that means a decade before that chart you're seeing there, they were at roughly the same price.
Sure.
Okay, so same question, I guess, is what do you like about this one and how do you see it coming through the merger?
Well, once again, a technology company creating smart products.
Yeah.
So the majority of the revenue comes from their packaging division.
Yeah.
And this is not the packages we see at the Shoprite and Woolies. I mean, these are very high-tech packaging.
Packaging what kind of things?
Well, packaging food to
Okay.
make sure that the food lasts longer. So being able to design breathable packaging.
Yeah.
So I think that's one element of it. Elements in the automobile industry, in the construction industry. So also, once again, selling into a wide variety of different sectors and different industries.
Yeah, and things like water and related industries, I suppose that's where the chlorine comes in. Elastomers, which is like special plastics that have special properties. And as you say, sometimes the applications might be in the auto industry, but it could really be almost anything.
That's
When
right.
you start going through their websites, they're very big in coatings, which means paints and related special applications. So that again, auto industry, that kind of thing.
That's it. And also being able to build for cheaper.
Yeah.
Being able to insulate houses in
Yes,
America
exactly.
far cheaper and,
So
and much
insulation of houses, that means like creating the foams and other substances that you inject into the dry walling in order to provide a certain level of insulation, that kind of thing.
better. That's it.
Big
So
markets.
they're not as big in the agricultural sector as what DuPont is.
Okay.
So I think that's once again, a nice synergy with the potential acquisition.
Yeah. So as far as it seems with the deal, the proposal is to get it together. They're waiting for EU approval, which is going to be the hardest, I think, to get. And then there's the US Department of Justice. The plan is that Andrew Liveris, who is the CEO of Dow, quite an enigmatic, outgoing Australian, who's been in the US a long time, will become the chairperson of the board. And then Edward Breen, I think his name is the DuPont CEO, becomes CEO of the enlarged group, and then there's the split. Okay, anyway, it's either going to happen or it isn't. We need to go to the local companies. So hot or not for this one?
I'm hot
for
for
you?
this one, Paul.
Hot on
I
this
like
one
it.
too.
I do.
So you just think that overall the outlook for their customers is okay, and therefore their outlook's got to be okay.
Yes, I think they'll continue to come up with new products, new technologies. I think the world is craving for all these products that they are designing. The world definitely needs it.
Yeah.
And of course, they're very focused in the US, and the economy is doing very
And I
well.
guess your point is if they don't pull off a merger, they're still fine because they still have the businesses that they've got and those will be fine. Maybe there's a little bit of deal-related elevation, but because it's a merger of two partners and not a buyout of the one by the other with cash, there's no sort of deal premium. It's all in the prices.
That's right.
Yeah, okay, so you're going to go hot on this
I'm
one
hot,
too.
yeah.
Okay, now I feel bad. Okay, I'm going to go with not hot as well, just on the basis that the markets that they serve could just be a little bit more under pressure, but it's close.